Here's an interesting question from a reader. You've had a good stock, it's been going up for years, then it starts going down. When do you get rid of it? What percentage loss do you let go of it at?
Well, that's one of those things that, people kind of assume that good stocks go up, like a bunch of people in an elevator. When really what happens is most stocks go sideways for, unpredictable periods and then shoot up. And if you try to only be in the stock when it's shooting up, you'll wind up buying at peaks quite often because those, the shooting up, portions of the stock's life are unpredictable. Unfortunately, sometimes stocks go down for a bit, and you think, well, now I'm buying on a dip, great, and then they go down some more, and you might say to yourself, well, I'll stick with this until it drops 5%, or I'll stick with it until it drops 10%. But unfortunately, there's a random element, in the market that a stock can drop 5%, it can drop 10%, and there's nothing that says nothing about what happens next. And I can tell you the fact that you own a stock that's dropped 5 or 10% also says nothing about what it's going to do next. So you shouldn't let that influence your decision on whether you hold or sell. What you should do is look more closely at a stock that goes down, and say to yourself, is there something I'm missing here? Is there something that's deteriorating about this stock? Something that's questioning, it's undermining its value? And if there is, then of course you should sell it. But it may well be just kind of one of those random elements that comes along that you just have to accept. Another point of investing in a portfolio instead of just one or two stocks is that while some of your stocks are randomly going down, others will be going up. And what you really need to look at is what are your long-term total returns, and not fret over one particular high-quality stock that happens to be going counter to the market and losing ground.